Aloha, everyone. Welcome to Java. Thank you for joining me. This is for Tuesday. It's October 10th, 2023. Got quite a few things to go over with you. The first is that the bond market is open today. So, yesterday played out kind of how we said that there would be quite a bit of volatility to start off with on the news and then kind of move into a chop for the rest of the day. And it actually went to positive toward the end of the trading day. So that has brought down risk quite a bit. We're still in the extreme territory above 310. However, it's much less than it has been over this past week. So with that, we're watching futures go green as retail investors are actually putting their money back into the markets. We watch the VIX retrace. That is the volatility index for the stock markets. We are watching oil went up yesterday on the war news, and gold. People started going into the safe play of gold as well as treasury markets. So we'll look into that a little bit more, but the current sentiment is neutral to bullish, kind of in a recovery mode. So our calendar for Tuesday is pretty light. We do have wholesale inventories, but I put Wednesday on here because we're getting some inflation data and it's prior to the market open. So if you're a long-term investor, you want to adjust your portfolios either prior to the close of the day or look at numbers to be adjusting at the close of day for your day trading. So we've got a few stories on the Treasury market sell-off talking about the worst bond bear market of all time. This is a little bit of an older story. And they're talking about treasuries reaching a bottom. But the point here is that they are actually talking about the debt market finally. So they are watching the debt market is larger than the stock market, and it is major driver in how things are moving. So on the back of this, we've also got that investors are flocking to the short-term treasuries. And this is a safety play. So if you can get a government-backed yield on your loans, it's kind of a safety for the money. Normally it is. And then we've also got the story that bond investors are anticipating an end to the treasury route because people are putting their money in this on a higher risk environment. So we've also got US hiring surges with those larger employment numbers, bolstering the case for another Fed rate hike. Well, as we saw the other day, these are really part-time jobs, not really true employment spikes or employment strength, as they're kind of putting it forward. However, the narrative does support if they would like to do one more rate hike. And I think that's what's coming. So we've got our inflation data is coming this week. Big financials report Friday. We've got Fed news coming in, and they're talking about a new disruptor. They're talking about this Ozempic drug, which is for weight loss. And I think this is kind of a cover story. They're talking about how they're purchasing less groceries. And this is a cover saying they're losing weight, but really it's because people can't afford it. So look at the weakness as it is. So with oil, we had the Israeli-Palestinian conflict pushing oil prices higher. Of course, the war machine is good for stocks and it pushes oil. We also had share prices of Western military contractors shoot up after all of these issues going on. So we had global oil prices jumping nearly 4%, and the Brent futures were up 3.7%. We knew this would happen. And when oil spikes, I expect it to retrace a bit. However, it will continue to increase, especially as this war goes on. And when you see oil go up, this will continue with inflation. So we're going to be watching increased inflation, and coming into the holiday season, it's not a really good thing. So I have a couple of things I wanted to go over with banks. I've had a couple of viewers ask questions about the banks and defaulting and what's going. Banks are still incredibly weak. We've got more bank mergers and defaults that are on the way. And one of you, I still have to get back with you in an email, and I will. But I wanted to show this was posted by someone in X, which what used to be Twitter. So one moment on this. He posted how much his payment has gone up. It was 2,992 a month, and now it's gone to 3,813. But this has nothing to do with the rate directly. What this is his insurance and taxes have been revalued and put into the escrow. When you escrow these and add them into the payments, the amount is staggering. So, as we watch this happen to not just this person, but multiples across the country, even though their payments may stay the same as far as their mortgage payment, the added on escrow will be forcing quite a few more to start selling their homes. So, we're going to watch that come onto the market as well. So, we've got some stories from the IMF, the International Monetary Fund, nicknamed Mafia Fund, because they pretty much control quite a few things. So they're saying the weak tail of banks could struggle in an economic downturn. Well, in the very next story, they're talking about how terrible the world economy is, that it's limping, and the Mideast war is posing new uncertainty, which will cause more weakness in this economy. So pretty much we can expect some banks to go under. So I had this story which is being reported by China, not so much in the West. Corporate bankruptcies in Japan topped 4,000 April through September. So they're also experiencing corporate weakness and they're having businesses close there as well. That's going to put further pressure on the banks. And then we've got the IMF saying that China needs to take forceful action over their real estate woes. They're bringing up Country Garden and their defaults. Well, this is the pot calling the kettle black because the IMF has its own issues that they need to take care of, however, going through with these. So, some more in political news I wanted to cover because they do have an effect in the markets. They're talking about this military operation that it will take a long time. Well, this is incredibly inflationary because, as you know, we're borrowing in the West. The United States has committed to sending all kinds of weapons and aid, which costs money in the tune of billions of dollars. So that's highly inflationary. And we've also got Hamas. This is just terrible. But they're threatening to kill the hostages. So this just ensures that we must support this war. We must support Israel. And so we will be putting more money into this. We've also got Kennedy is announcing that he's running as an independent rather than running under a party. And his siblings are talking about this is dangerous. We all know what happened to his uncle, that he was assassinated. And so they're speaking their fears for him. But this is an interesting interruption, a little bit of a distraction, but at the same time, this will cause political upheaval as well. So I've got a couple of lava updates that I wanted to go over. And this saying the quiet part out loud, the disturbing suspicion where Hamas got its weapons. And then we've got the counter story. So they're going to have obviously the Russian view and they're opposite the side of Ukraine. But the ex-Russian President Medvedev, Dmitry, is saying that basically they've found weapons that the US has given to Ukraine are now in the hands of Hamas, as well as weapons that were left behind in Afghanistan. So we all know this is happening. It's already clear that we've basically funded this and weaponized them. So we've got to stop doing things like that. However, if there's anything you like in this video, please hit the like button at this time. And for now, I've got a special request. So by special request from Quadman, I've got a bit of a translation here. And it means have a good day. This is Hawaiian. And it is Hela mai ka'iia oi. And as always, my friends, elikeme na makamakamau, stay free. Noho Manuahi. So, Hela mai ka'iia oi, elikeme na makamakamau, noho Manuahi. Until I see you again.